Now he's got the back.
He's out.
He has done it.
Connor just slices through him like butter. Look out.
Oh.
Uppercut. Wow. What did we say before this fight? We had never seen.
Oh no.
What's the retail on one of those?
And now he jumps the fence.
No.
Whoa! No! And he's going right at Dylan Dennis. Mayhem!
Oh, no. Here. You cost off to the title, you bastard. Get in there fighting. You want to, you screwed him out of the title. Don't worry, he's going to get in there, all right? Blows all legal. And look where Orton's head landed.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and things are getting interesting. Things are heating up. So we're going to go through some charts, going to examine some of the closes, take a look at those. In the meantime, we have got quite a stacked week. Yesterday, we had existing home sales and US economic activity, which we'll get to in just a minute. Today, we've got FOMC meeting minutes at 2, and the Fed member is going to speak. On Thursday, we have GDP Q4 plus initial jobless claims. Then we've got PCE, core PCE, personal income, personal spending, all on a Friday. So it's going to be quite a choppy week. I expect this volatility to continue. I think it might be time to go to neutral. I think it might be time to take some off, let the hedge do some of the running. So we'll get to the charts in just a minute, but things at the moment are starting to suggest to me that it might be time to go back to a neutral stance and assess the situation. So as of yesterday, the economic data has come in better than expected. The S&P Global Composite Flash PMI has now entered expansion territory. So we had a forecast of 47.5, but the reading came in at 50, and anything above 50 is indicative of expansion rather than economic contraction, which would be a reading sub 50. So the economy is in better shape than we expected. However, good news is bad news in this kind of environment, and the reason for that is since we've got an economy that's doing better than most people thought, this actually gives the Fed a little bit more wiggle room with respect to hiking rates. So are we going to see an additional rate hike coming? We definitely have the yields running, and the yields are anticipating further rate hikes. So that, of course, remains to be seen. Maybe this narrative of higher for longer is going to come into fruition. Minavini here nails it. And this is exactly my thinking, okay? After a run up above and counter to the declining 200-day line, a general market pullback here is completely natural. What he wants to see during a pullback is renewed pessimism and stock setups. The best condition is when you have lots of individual stock setups and few believe the rally. So what we're looking to do here, if the bull thesis is still intact, and we won't know for sure for at least a week or so, but if this bull thesis is still intact, if the melt up is still on the table, then what we need to see is a complete sentiment flush. And this would actually align with the typical behavior you get into a cycle low, which we'll get to in a minute for the S&P when we get to the chart section. There's still plenty of reasons to be bearish. January just saw the largest bankruptcies in over a decade. Things you don't see in a soft landing, and this is exactly one of them. Of course, we know the soft landing was never coming. I'm never calling for a soft landing, but I am expecting the soft landing narrative to pick up as stocks bounce. I still remain quite bullish. However, I am slipping towards neutral. Not flipped bearish yet by a long means, but I am slipping towards neutral given the current price action. Data, however, makes me think that we still have a very good chance of resolving to the upside. I just think we need to reset the sentiment. Check this out, okay? No prior S&P 500 bear market in history has ever made new lows after making 18 consecutive closes above its 200-day moving average. Kind of fits what I was talking about at the start and what Minavini was tweeting. A pullback here is completely natural. However, we want to see it form a higher low. Again, we'll get to the charts before too much longer. Labor shortages are coming to an end here. Soon, wages are going to fall. Disinflation to deflation is coming soon. Remember, we are in this period, this Goldilocks period between the two. Inflation is apparently coming down. We know deflation is at the other extreme, the other side of the pendulum swing, and we think that in the middle of this Goldilocks period, there is chance for the market to rally. German economic sentiment is rocketing due to China reopening. So you can see that here in the blue. This is German economic sentiment spiking higher. The S&P should follow. So there continues to be subtle hints that this is possibly a pullback within the context of an uptrend, but we do have to be a little bit more defensive in my opinion. Over in the Bitcoin world, things continue to look a bit better. Bitcoin and the crypto are showing relative strength compared to the equities. China is quietly supporting Hong Kong's plan to become a cryptocurrency hub. So again, we continue to see this adoption on a global stage. Over in Italy, their high school students are learning about Bitcoin in schools now, following in the likes of El Salvador. And the fundamental strength indicator, the FSI, continues to improve. Now, this actually indexes, it collates 17 fundamental and technical indicators into one. And as you can see, the fundamental indicator, the FSI, continues to push to the upside, continues to look like it's making a series of higher lows, higher lows, higher lows. And Willy Woo here says that if we can get above 25K, we could be in for a massive short squeeze. And so imagine this scenario. Imagine the stock market pulls back over the next week or so, ends up setting a higher low. And I'd like to pause here and just point out that what do we know is coming up around the 28th of February, the 60-day cycle low for Bitcoin, and what is likely coming up just a few days after that, the S&P 500 cycle low. So let's say the Bitcoin during that cycle low retests and hold 20K, and the S&P 500 dropping into that cycle low prints a higher low. Of course, all the way down into those cycle lows, the bears are going to get trapped and slapped again as we move back above 30K for the first time in a year. So with all that said, let's hop into some charts and see what changes, what significant changes have been made since yesterday. All right, so let's just, before we get into the charts, let's just remind ourselves of a few things, okay? If you're a bear and you're celebrating this move, then you're wrong, okay? It's too soon. And if you're a bull that is worried or filled with anxiety and panic and is not sure what's going to happen, then again, you're wrong, okay? Zero emotions, zero pretending like we know what's going to happen. Let's remind ourselves of a few things before we get into this TA, okay? One, nobody knows what's going to happen, including me. Least of all me. I have no clue what's going to happen. I say this all the time. This was my expectation, and right now my expectation is being tested. So it's not wrong yet, but it certainly looks worse than it did going back a week and a half ago. It doesn't matter about being right or wrong. Let's remind ourselves of that as well. Remember, as investors and traders, we get things wrong all the time. This was an expectation, not a prediction. And right now, that expectation, that thesis is being tested. Now, it is only being tested because if this level, this purple level of support can be indeed flipped from resistance into support and then we can start to move up, then there's nothing wrong with this. This is still the primary expectation. But some early warning signs have shown up. If we can get back below this purple trend line, things start to become very questionable about whether this whole thing is going to be valid in the first place. If you've been a viewer of this channel for a while, then you'll likely remember that we did really well at capturing this move. We got the breakout retest resumption, we got long here, we rode this trend all the way up here, and then when we took out this low here on this candle, when we took out these lows, we said that was as far as we could reasonably push the trade. There was plenty of bears at that time coming out and saying, haha, I told you so, or I was being called names, I was being called a loser, blah, blah, blah. Anyway, whilst those people expected new lows to come, in fact, what happened is we formed a higher low and then we ripped higher. And this has a very similar vibe, has a very similar feeling to me as back here. Right now we've got bears championing this move, bears coming out and saying I told you so, when all we've really done is moved into neutral territory. All of this is neutral, right? Because if we get below this, it becomes bearish. Get below this purple trend line and it becomes bearish. But get above this purple trend line and it becomes super bullish. So anything in between is just no man's land, right? I also think it's worth pointing out that the bears out there at the moment that are praying for this move to roll over and become a very, very severe stock market crash, they're mostly just doing that because they missed the entirety of this move up, right? They missed all of this and now they're salty about it and therefore they want to be proven right eventually after being wrong for months. Just remember, like I said, it's not about being right or wrong, it's about staying on the right side of the market without bias. So, with all that said, we know we're being tested in our thesis, in our primary thesis, but we also know we don't care which outcome occurs, right? Because if it breaks out, fine, happy days, then everything's going as expected. And like I said, if it breaks down, then we know that this expectation is likely invalidated and we need to look for new positioning. So hopping into the dollar, not a great deal more to say, right? We know that likely we're going to target these highs here at 105-ish, and we know that if we can get through them, then the next logical target becomes 107, 108, somewhere around this trend line. The yields have confirmed the breakout. We had breakout retest resumption higher. We're now above this local high here. So this is a structural repair. These, of course, are pricing in higher for longer. And as we were saying all along, that if this didn't roll over like my expectation was, then this would, of course, put pressure on risk assets. And that is exactly what we're seeing at the moment. So hopping into the stock market, what do we know? What have we learned? Well, we had the breakout retest resumption. Now it looks like we're coming in for a secondary retest. So far, objectively speaking, we're still above this red upward sloping support line, aren't we? So we haven't had a technical breakdown yet. Get below that, and I think it's time to respect that trend line and say that probably bearish things are going to happen. All this area in here is neutral, of course, as I said. Get below this blue or red line and things start to get bearish. But break above this purple downward sloping resistance line and things remain bullish. It also remains bullish if it holds this red support line as well, of course. Seems to me that we can scratch off this blue count. I'm very close to doing this, and therefore it would be reasonable to expect a green cycle count to be accepted and a cycle low to form somewhere over the next coming week. So are we just going to see what turns out to be a bear trap that kind of holds this level or even wicks this level before swiftly recovering out of this cycle low and trapping all those bears offside once more? Of course, this would again form another higher low, as you can see here. And so therefore, where is the bearish case? Now, again, I'm open to all outcomes. I have no idea what's going to happen, just like nobody else has any idea what's going to happen. If this starts to morph into a more bearish look, then we will have to deal with that, particularly if this moves down into a cycle low that bounces up and then fails and takes out that cycle low. That will be the exit for all longs. That will be the trigger to tell us that there are new lows likely coming and that we need to flip from a net long to a net short position. As I said, let's remain unbiased, flexible. Let's remember that all of this in here is neutral and we need to see a few more candles before we can know what's about to happen. Hopping into the NASDAQ, I took my position off of the NASDAQ. I took my position off when I saw us take out this local low. Let me zoom in so you can see exactly what I'm talking about. When we took out this low right here, as of yesterday, we gapped down and retested it on the smaller time frame and then started to move down. I took my position off and I'll explain why. This, like I said earlier with the S&P, has a very similar feel to back here. So we did well. Again, if you're watching the channel, you know we did this live on the channel. We bought the breakout retest resumption. We rode this trend up here. We were looking for a breakout. We were holding it as long as possible. But then I said, lose this cluster of lows here and this chart becomes technically damaged. Chart becomes technically damaged when we lose these lows, and on there that was my exit to tell me, okay, this is no longer an uptrend and we're going to have a correction. And of course we did. All the way in here I was neutral with no position, and I was saying live on the channel almost every day, none of this is interesting to me until we can make our way up to this red downward sloping resistance line where I will be looking to add a long on a breakout retest resumption. So we sat there patiently, we waited for that setup to come to us. Of course it did. We got the long on the breakout retest resumption, and since then we appear to be slightly rolling over now. So it's the same deal, right? Once we take out this low right here, it becomes structurally and technically damaged. So therefore I wanted to hop out of this position. Now, as you know on this channel, I often say this. I often preach about trying to be the most transparent trader possible. I often, I show you all my positions every single time. I call them out weeks in advance. No other trader that I know of does this. But part of what I do is I hope to become the most reliable, the most open and transparent trader on YouTube. And in order to do this, I need to point out all of my mistakes as well. When we had this upward sloping support line and we broke down, I kind of said, I'm going to hold this trade. I'm going to hold this trade. I'm going to push this trade. I'm going to see what can happen because I think it's likely going to do that. Now, in hindsight, and of course it's always easy with hindsight, this was a mistake. Once we broke down from this level, that was our early warning sign, and I should have just gotten back to neutral there. I should have got back to neutral here, waited to see what unfolds, and then we can get long on a break at this downward sloping purple resistance line here. For some reason, I just decided that I wasn't going to do that. I was going to see what happens, and now I've had to get out around this level when I could have got out at this level here. So I gave back a little bit more profit than I needed to. Ultimately, it doesn't matter because all in here is neutral, right? All of this is neutral. And similarly with the S&P 500, we break out above this downward sloping purple resistance line and we put the position back on. That is my primary expectation at this moment. My primary expectation is going to end up putting a long back on a breakout of this trend line, something like this. And we will look to go again. It's also important to point out what I was saying earlier about just we're back into neutral territory. Okay, we're back into neutral territory because we've got our first early warning sign, this breakdown here. But look where we've ended up. Okay, this was resistance, 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 support, support, resistance, 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 turn support, and now we're just kind of back testing that level. So it will be interesting to see if this holds. If we hold out of here and then we can break out, that's ultra bullish, right? But if we hot knife this today, if we do something like this, then of course that's super bearish and our positioning will need to be challenged. But as of right now, I've walked away with a bit of profit on this. I'm still pushing this trade all the while we're above this red upward sloping support line. But like I said, we're back into neutral territory. It's time to get a little bit more defensive. I still have my Dow Jones positions, and you'll notice we're right into this upward sloping support line, and we're still above the 2022 bear market line in blue. I've been very consistent in saying all of this in here is net sideways, and I still stand by that. However, we break down from this line here, and that's going to be our first warning sign. And then if we're stopped out on this position, it will likely mean that we have undercut all of these lows. Well, it will mean that we've undercut all of these lows, and therefore the chart will be significantly technically damaged, and all longs for the Dow will therefore be invalidated. As it stands though, we can still tolerate a move like this, and an add can still come if we can break above the top of this range. So the VIX hedge still performing, still gapping up. Nothing more to say about that apart from long and strong continue to push the VIX, and we will see. We'll see if these support levels hold. We'll see if this turns out to be a throwback. We'll see if this turns out to be just a retest of support, a flipping of resistance into support before resumption higher, or we'll find out if we're going to hot knife all of these support lines and end up morphing into a much more bearish look. I've got the Russell 2K here. I really like this setup. As you can see, support, support, resistance, resistance, kind of support, flipped into resistance, 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 flipped to support. Now potentially a back test. So if we can hold this blue box that I've drawn, if we can hold this zone for the Russell 2K and then break out of this downward sloping blue resistance line here, that will be a long from me. So I'm calling this out ahead of time. Maybe this has to come down further before it can break out. Maybe not. Maybe it's going to just hold this week and then break out next week. Either way, I'm calling this out ahead of time. I like the look of the Russell 2K, and if we can get a breakout above this downward sloping blue resistance line, expect me to tell you I have added a long position that will look something like this for the Russell 2K. So I'm still looking for longs. Now, again, lose this blue box, lose this area, come down, and particularly if we back test it and continue lower and we can't break out of this, then this is not a valid trade. I won't be entering any longs, but expect me to tell you I've gone long on the Russell 2K if we can break out. Again, we're just in neutral territory at the moment. Nobody knows what's going to happen. The UKX, the FTSE 100, right into trendline support. So I've been saying all along, we lose this support line and it will be time to probably not only cut this trade, it will certainly be time to cut this trade and exit with a profit, but it will also be likely time to flip short. So is this what's coming, or is this going to continue to hold like it did in all of the prior times? That of course remains to be seen, but I'm keeping a close eye on this and getting ready to cut this trade if we can close on a daily candle below this red resistance line, support line. I also took my Tesla long off yesterday. Again, this isn't really a reflection on me flipping bearish. I'm not short the market. This is just me protecting the profit. I've made very, very good profit this year. And the thing is, with trading, most of it is not really about making money. It's about protecting money. If you make loads of money all the time, that's great. But then if you end up giving it back, what's the point, right? You do all that work to get underneath these squeezes, you allocate capital, you ride these trends like this. And then if you end up giving half or 3/4 or even all of this back, and a lot of traders, I'm sure we've all been there at some point, have this big open profit that you end up giving back at a loss. You end up getting stopped out and taking a loss when you've got all this open profit on the table. You know, that is not a sustainable way to trade. So right now I'm up something ridiculous, like 70, 80% on this trade. That's absolutely fine. So I took this trade off yesterday. And the reason is I got out at around 205. That means if we're going to break out at the top of this range, I've given back about 10 points, right? I've given back 10 points because if we do something like this and then break out, I can add my long back on a breakout of that box. So I would have given up 10 points of profit there. But if this comes all the way down into support and then closes below, you can see that'd be all the way down at 180-ish before my trigger to say, okay, we didn't hold this line anymore. I can't keep pushing this trade. So I thought it's better off giving 10 points of profit back, potential profit, because obviously we don't know. This could easily do something like that, and then it would have turned out I sold much more higher up than we thought possible on a breakdown. But in the worst case scenario where it turns out I sold too early, then we will get something like this and we'll blast off the top of this box and I can just add the long back. So I've locked in my Tesla profit. It's important to point out Tesla's showing relative strength here. Tesla's not breaking down, not like the NASDAQ is, and certainly not like Apple. Here's Apple, okay? So I didn't take the Apple trade, but this is kind of right into the last point of possible justification for being able to push this trade. The early warning sign was here on a breakdown of this upward sloping purple support line. We've lost that, and now we're looking to take out the lows for Apple. So this is not relative strength, in my opinion. To be clear, no position on either of those. Looking to add Tesla back if we can get above here, but I suspect that there's probably going to be some chop and a bit of sideways action before anything significant can develop in the future. So profit locked in there. Metals still kind of waiting on the sidelines, so nothing more to say about those. Bitcoin to me looks like it kind of wants to drop into this cycle low. We know it's due pretty much any day now, any day between now and the end of the month, maybe slightly into March. So we'll be looking for a drop down, we'll be looking for a swing low pattern, and then that will become the trigger for adding positions. That will become the area we can move the stop loss from here up to here for, and we'll be looking to ride the next 60-day cycle for Bitcoin. When all of these cycle lows form, it's important to point out that the primary function of a cycle low forming on a daily chart is to flush sentiment. So I want to see everyone get super bearish over the coming week as we approach this cycle low for Bitcoin. I want to see everyone flip super bearish. I want to be seeing people on Twitter posting shorts. Oh, I'm short Bitcoin. I shorted the top, calling themselves top shorters from up in this neighborhood, only for us to form this cycle low down around the end of this month, and then we can sharply reverse and scorch all of those shorts. So that's what I'm looking for. And similarly in the stock market, I'm looking, as we approach this cycle low here, as we start to sort of chop around and find our cycle low, I want to see everyone flip bearish. I want to see all the bears coming out and talking about how they were right all along, and ignoring the fact they missed all of this move, right? And that's the sort of thing we want to see. We want to see a real sentiment flush. We want to see a real sentiment shift. We want to see everyone calling for new lows by March or April. That would be the kind of thing that can fuel a bounce out of here that actually sustains to the upside. So in summary, just remember, okay, there's no bias, there's no emotion, there's no place for any of this nonsense in the markets. As traders and investors, we get things wrong all the time, and that's not important. What's important is trading both ways and staying on the right side of the market. As I've said a dozen times in today's episode already, remember, we're just in neutral. We went from bullish to neutral. We're not bearish yet. This could certainly turn out to be retest. We could even wick all of these levels and then swiftly recover, and that would be another sign that all the bears were just trapped and that we're still going to be bullish. To be clear, I have no idea what's going to happen. I was bullish. I'm now neutral. I've taken some longs off. I'm ready to jump straight back into longs if the markets tell me to do so. If you want to continue to see how I deal with all these markets in real time as a pro swing trader, make sure you hit the subscribe button and turn the notifications on. Drop a like if you appreciated today's video or you found value here. In the meantime, take care from me. I'll be back tomorrow. All the best. Cheers. Bye.